Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and here with me today is Morningstar's Jose Garcia Zarate to talk about governance. Hi Jose.
Hello.
So I think there is a conception, maybe it's a misconception, that it is only active asset managers that care about ESG issues, in particularly governance, because passive fund providers are made to buy the entire of a particular index. Therefore, ESG is just not part of their consideration. Is that true?
Well, that is actually the misconception. And the fact is that because passive investing is growing so rapidly across the world, there's been a lot of press noise, particularly saying, well, basically, how do we know that these passive managers care about, the companies, the governance, and how these companies are run? Because at the end of the day, they have to buy all the companies that are in an index. So do they really care about how the companies are run? And so we decided to run, a study, a survey. We're not, particularly, experts in the corporate governance area, but we thought it would be a good opportunity to either prove or disprove the misconception.
And I think it is very important because, as you highlight, passive fund providers are increasingly taking share in these companies. I mean, iShares alone is, one of the largest providers of these types of funds. And so what were the key findings from the survey?
Well, what we found actually is that they take it very seriously. Most of the providers that we surveyed, and we surveyed 12 providers of passive funds in total in the United States, in Europe, 2 in Japan. The fact is that it's very rare to find a pure passive fund provider. So, for example, you alluded to iShares or Vanguard. They do both active and passive. And the fact is that when it comes to corporate governance and actually overseeing the companies that they invest in, they apply exactly the same principles, irrespective of whether the stock is in a passive fund or an active fund. So that was a bit encouraging in a way. We also found out that there's been a significant increase in resources dedicated to the corporate governance teams in these companies. And I think that's actually quite encouraging for investors that might be concerned that, I'm investing in a passive fund, but basically, the manager doesn't really care about how the companies are run. At the end of the day, these companies, or the passive funds, are the ultimate long-term investors. They cannot sell the company as long as it is in the index. So they've got a vested interest, actually, in making sure that the company is well run.
So overwhelmingly positive, but there must have been some disparities between the providers, or at least in the answers that were given by the providers. What were the key differences that you found?
I think most of the key difference basically are related to the scale of the operations. So obviously for the biggest fund providers, it is easier, let's put it that way, to devote the financial resources to increase the corporate governance teams, to engage with the companies that they're investing in, because this actually represents a financial cost, and that financial cost, sooner or later could actually be, paid by the investors. So there are differences in the scale of the programs. But overall, we were positively encouraged by the efforts.
And what about the direction in which they're moving? I presume, given the positive feedback you've given so far, that this is something that is increasingly important to these providers.
I think it is becoming increasingly important because, as I mentioned earlier on, I think they're getting a lot of negative press and media coverage because there is hardly any understanding of what they do. And actually, one of our recommended best practices goes to the issue of disclosure and education. I think it is important for passive fund providers to let people know that they're doing this and how they do it, and provide as much information as possible.
Jose, thank you very much.
You're welcome.
This is Emma Wall for Morningstar. Thank you for watching.